Hey everyone, I'm Jeremy Szafron. You're watching Kitco News. Don't forget to hit that subscribe button for the latest. Now this year, the oil market has seen some growth in demand, but it's cuts from OPEC and supply disruptions that are really pushing prices up. Now we're also seeing geopolitical tensions in the Middle East and Europe, adding more pressures and of course adding a layer of complexity to global energy security and the oil and gas market dynamics. Now, on the natural gas front, the U.S. is dealing with an oversupply that's broadly affecting everything from the electricity costs to the U.S. commodities. We're going to find out what that means. Joining us to unpack all of it today is Ernie Miller, CEO of Verde Clean Fuels. Ernie brings over 25 years of experience in the energy sector with a deep focus on innovative solutions for using stranded natural gas, which we will get into in a little bit. But Ernie, thanks for joining us today.
Thanks, Jeremy. Happy to be here.
Yeah, I appreciate your time, and I kind of want to give a little bit of a macro talk. Let's start by discussing the dynamics of the oil sector. I mean, as I said in the intro, given that the global oil demand is projected to grow somewhat modestly in 2024, yet supply disruptions and OPEC plus cuts continue to push prices higher. Give our audience the lay of the land here. Where are we right now in the global oil market?
Well, it's a complicated environment. I think we're going to see demand growth probably slow a bit. We're dealing with some lackluster macroeconomic conditions in a high inflation, high interest rate environment. We're also dealing with a post-pandemic recovery that's running out of steam, and all of these factors are contributing to slower demand growth. And on the other hand, we're seeing supply disruptions that's going to have kind of the opposite effect on pricing, and then of course we're always one geopolitical event away from $140 crude, pick a number, that whole factor is playing into the equation as well.
Yeah, that volatility in the market's been quite outstanding to watch. How do you see these dynamics affecting the global energy security, especially given tensions in key oil producing regions? We talked a little bit about the Middle East. I mean, are teams in the boardrooms of the majors watching things carefully here, or are they focused on other things?
No, they're certainly watching very closely. And when you think about overall oil production, you've got 11-12% coming out of Russia. That's an absolute wild card today. You've got another large chunk coming out of the Middle East. That's obviously another point of risk. And we've got the situation in Israel with Hamas, and how other regional players like Iran may or may not jump into the fray. I think the market really held its breath when we had the Iranian drones heading over towards Israel, and I think collective sigh of relief when the response was from Israel was measured, and so we've got a geopolitical environment that's very tough, very complicated between Russia and the Middle East. It's not unusual to have one, but maybe both in play at the same time is particularly tough, and then and then all the more macroeconomic factors that are driving things as well.
Right. Tell me a little bit, or talk to me a little bit about the global dependence on oil. Obviously, this isn't going away anytime soon. I think people understand that. But could these volatile dynamics lead to new geopolitical alliances, or maybe further conflicts within these regions that are oil rich?
It certainly could, and for all the talk that's gone towards towards an easing on the reliance of oil, the fact is that the numbers just don't bear any of that out. It's I read something the other day that we haven't even seen peak oil yet, and so or peak oil demand yet, and so oil is going to continue to for the foreseeable future to be to really be the biggest part of the energy sector, even as the transition to cleaner and alternative, lower carbon solutions continues to develop. Oil will be king for a long time to come.
Yeah, absolutely. And I think people are starting to get that. I mean, we saw this obviously when Russia went into Ukraine. We saw this energy scarcity happen in Europe that really brought to spotlight this talk about the energy trends, this revolution in green energy. And we realized that we couldn't meet those demands and those goals as quick as they could. I'm curious, though, with the U.S. reaching near record levels of oil production, not seen since before the pandemic, when all of this kind of happened, how sustainable do you believe that this growth is with the Biden administration's energy policies?
I think that this growth, these levels and growth from here is quite sustainable. Frankly, the Biden administration has there's been a lot of talk about restrictions and slowing down development and to a degree, there might be there might be less in the way of exploration of new potential fields and formations, but the industry is getting so much better at producing what we have, that fracking technologies have come along, and we're seeing much more production out of these legacy reservoirs than we've ever seen, and I believe that will continue. I think that the industry will continue to get more and more efficient at extraction, and we'll be able to use existing production and producing basins and producing areas to extract increasing amounts of oil for quite some time.
Yeah, and I mean, there's so much down there. It's fascinating. You and I need to unpack a little bit about that new technology. But before we do that, could the increase in production help the U.S. expand its share in the global market here, or are there substantial challenges that might hinder it?
No, I think it certainly can. I think it certainly can. We've got basins like the Permian Basin here in West Texas are just continues to grow, and you've seen some major acquisitions out there. Exxon has acquired Pioneer, Diamondback has acquired Ever. There's a long list of consolidations by the majors, which to me indicates that these are going to become really core assets that they're going to be extracting from a long time. And I think the ability to grow those producing areas is going to enhance the U.S.'s position as a net exporter of oil on the global stage.
Okay, was it the capital crunch or the access to capital or how expensive it was that kind of made this whole M&A boom happen within the industry? Do you see that continuing at these prices?
I think that drives a lot of it. I mean, if you've got the bigger companies have a lower cost of capital and better access to it, and those smaller, more mid-sized players that can't access capital in the same way, that those assets need to be on a platform that have access to everything needed in order to really accelerate the production out of those basins. So I think that drives a lot of it. Yeah.
Okay, is that going to continue, Ernie? I mean, I'm curious, especially because we had such profitable companies here for quite a while. I mean, we were seeing some oil and gas issuers giving out dividends, increasing dividends. Now that we're where we are, is the M&A going to continue on this consolidation phase, or do you think that there's going to be more explorers out there?
Well, I think that there's probably another round of consolidation that'll come, and I expect to see some really big deals come out of that. This started was sort of the smaller, lower tier companies that did some consolidation, and then kind of the medium companies, and now now we're starting to see some really big transactions. I think there's some even larger ones coming, and and so from that regard, I expect kind of another round of big consolidation to happen. But that then opens the door for some for the explorers to kind of start over again, and
Right. Yeah.
and you're gonna see some small players out there willing to take some risk and do some things that the larger companies aren't going to be focused on, and that'll start it all over again.
Yeah. Well, I mean, I know you're not obviously you're not an investor advisor here or anything, and you're not giving financial advice, but you are an insider in this industry and you're a veteran in it. Talk to me about investor opportunities within that. I mean, if we're going to see a consolidation phase, where are you pledging your bets?
Well, definitely oil. I am much more bullish oil than I am gas. I think we'll get into that in a minute, but
Yeah.
and so companies that come to mind, that have performed incredibly well over the last couple of years. Diamondback Energy, for example, operating in the Permian Basin has had a remarkable run and has been able to participate in this in that early consolidation, and so I'd be I'd be pretty heavily focused on oil producers, the Permian Basin in particular. Is one place I think there's a lot of value to be made.
Yeah, absolutely. Okay, let's talk a little bit about natural gas. The U.S. faces a natural gas glut with significant excess production. How is this all going to go with Biden's new restrictions on LNG, domestic gas prices? Talk to me a little bit about where are we?
Yeah, well, as you know, gas prices have been extremely low for the last several quarters, and then we just saw a pretty good bump in as the May contract rolled off, and we got into coming into summer. We had a very mild winter, and gas inventories were well above their 5-year seasonal average. I think it was north of 30% above the 5-year average. So we've got abundant supplies. That I think is offset to a degree by the expectation that demand will increase over the next couple of years, and supply, driven primarily by the very low prices, is going to remain relatively flat. So we could see some balance coming into the supply demand structure as demand increases and supply kind of slows. That will be slowed by the associated gas production out of places again like the Permian and Uinta Basin in Utah, where economics are entirely driven by oil production, and gas is just sort of a byproduct to be dealt
Right.
with. So that just brings more really cheap gas into the market. So I expect to see gas, strengthen a bit over time, but I do kind of expect to see it remain below $3 an MCF or so. Certainly through the rest of the year and probably most of 25.
Okay. So we got all the supply. I mean, what's the plan here? I mean, do you think that these policies will benefit the U.S. economy by keeping energy prices lower, or are they going to hinder development of the sector?
Well, it's got to hinder development of the sector. I mean, we've got we've got extremely low gas prices, so gas producers are getting squeezed relative to their cost of production. That of course will drive demand, though. Cheap gas is going to drive demand, and so there's the old saying, nothing fixes low prices better than low prices, and
Yeah.
the reverse of that is true too. Nothing fixes high prices better than high prices, and so I see I see a continue. I think we're going to continue to have an oversupply situation, and I believe that the associated gas from oil production is going to, is going to continue to kind of weigh on that, and so we're gonna find ourselves in a I believe we're going to be in a relatively low natural gas price environment for a while, but I don't think it's going to be $1.50 low. It's going to be
Right.
$3.
Right, just below the 3. I mean, it's sitting here trading around 217 now.
Yeah.
Let's get into it a little bit more in terms of some of the policymakers. I mean, it seems like everyone's been fighting oil and gas for quite a while. Correct me if I'm wrong, maybe turned a page here. People are understanding that it's not going to be as quick to get to this revolution, as we call it. I mean, Canada has opened up a new pipeline, and it's being urged by world leaders to increase LNG exports. How do these compare? I mean, how do you view this development in relation to policies?
That's a very interesting question. When you think about natural gas historically, in my mind, has been more of a regional commodity. I mean, you can move natural gas around the U.S. and even around North America to a degree, but natural gas is typically not touched by, say, the geopolitical happening in the Middle East that might be really driving oil. Now, as we introduce more and more LNG, natural gas can maybe start to behave a little bit more like oil and be more of a global commodity. I think we're a long way before there's enough of a contribution from LNG to really make that happen. But it'll start to contribute a bit. And the Biden administration, wanting to restrict or limit LNG development and export out of the Gulf of Mexico is really kind of threw a wet blanket over the hopes for, again, I go back to the Permian Basin and all that associated gas. Associated the West Texas trading hub yesterday was trading at negative $6.49.
Wow.
So gas. If you don't have firm transport out of the basin, West Texas producers were just getting killed on their natural gas, and the idea that gas could go to Corpus Christi and get liquefied and out into the global market would be a fantastic benefit for those producers. And as the Biden administration has tried to put the squeeze on that and slow those activities down, it's really got leaving producers to look to other alternatives for that natural gas. And
absolutely.
Yeah. So it's an interesting dynamic. And then you brought up Russia's invasion of Ukraine and everybody in the UK having to take cold showers. I mean, that's
not sustainable.
Not sustainable, and something that could be mitigated by more LNG out of Canada and out of the U.S. But that's a tough economic proposition to produce gas in North America. You spend the money to transport it to a coast, compress it enough to liquefy it, and put it on a ship to Europe. That's not a cheap fuel by the time it gets there.
Right. And, when you think about Canada and the U.S., they're typically partners. I mean, they're the biggest trading partners. And when we also think about it, not usually competitors. You and I know if you go to Calgary or in Edmonton or even anywhere in Alberta and some of Saskatchewan, you run into people that are working for U.S. oil and gas companies. So could Canada's increasing role in the LNG exports influence U.S. energy strategies?
I think it should. I think that I think that the U.S. administration should look and see, that gas is getting exported to these markets, and why shouldn't it be our gas? I think that limiting that and access to those global markets is incredibly short-sighted for any administration to try to affect that kind of policy.
Yeah, going to be interesting with an election year here taking place as well. Ernie, we talked about your veteranness. Veteranness probably isn't a word, but you know what I mean, being in this industry for a very long time. In your experience, what are the most critical factors that energy companies must consider today? I mean, we got this geopolitical complex environment to navigate everything that's happening right now with regulations, geopolitics. What's the most critical factors?
You know, I was chatting with somebody about this earlier in the day, and you know, the industry I think really needs to remain very disciplined in their use of capital,
Mhm.
and then the financial markets and debt, and not fall into the same trap that the industry has slipped into time and time again. And maybe it's just unavoidable. In a competitive market, you're always you're driven by shareholder value,
Right.
and shareholder value and market value may be two different things, and might not be consistent with one another. So, I think that the industry needs to really try to maintain its capital discipline, and not and not let itself fall into the trap where where we see oil prices slip
Yeah.
back into the 40s, and heaven forbid 30s, just
Yeah.
on overspending, and bringing more to the market than it can handle.
Yeah, knock on wood. We've definitely seen that environment before. A lot of people without work too.
Yeah,
Okay, let's
yeah.
talk a little bit before I let you go, because I could talk to you all day here, Ernie. Let's talk about how to stay alive in this industry. I mean, if we are going to be going towards this new sustainable approach, this greener economy, we're being more cautious of how, carbon offsetting. How do some of these new technologies work? I mean, I know that your company is converting flared and stranded natural gas into usable products.
Yes, yeah, yeah. So that's great. Thanks for giving me the opportunity to tell you a little bit about Verde. So, our company is focused on disadvantaged natural gas. So we have a partnership with Diamondback Energy in the Permian Basin, and we're taking associated gas that is, it's disadvantaged. It doesn't have firm transport out of the basin. It might be trading at that negative value on certain days, but we have a process to turn that natural gas into just commodity grade gasoline. And so what that does for producers is allow them to really to shift their natural gas exposure for something that looks and trades a lot more like WTI. And in a lot of producing basins, that's a trade that producers would want to make all day long. And so, we've got a project coming together with Diamondback where we'll take about 34 million cubic feet of gas a day to produce about 3,000 barrels of gasoline a day. And there are similar opportunities in the Uinta Basin in Utah, and in the Appalachian Basin in Pennsylvania, and so that's our focus, and that's a global opportunity that we're very excited about. And that process, can mitigate flaring. Any molecule of gas that you can consume in the Permian Basin is likely a molecule of gas that doesn't get flared somewhere. So there's, that decarbonizes every molecule of hydrocarbon that Diamondback is producing in the basin. So it's a great economic story for producers, and it's got a really strong environmental argument as well, that oil and gas producers really can participate in this decarbonization.
Yeah, in this new global economy too. Are oil and gas producers keeping up? Are they investing enough in R&D?
Yeah, yes, I think that it's amazing. It's amazing to me to see the companies that are really active in the energy transition, and it's the names that you see are all the major major players in traditional upstream E&P. So everyone from Aramco and Shell and BP and Exxon, these guys are, these are the players that have the technology and have the know-how. They've been dealing with carbon for decades, and these are the companies that are going to drive the energy transition forward.
Yeah, well said. Ernie Miller, CEO of Verde Clean Fuels, joining us from Texas today. Thanks for your time, sir. This was helpful. I appreciate it.
Great. Thank you for having me.
Yeah, we'll see you soon. I'm Jeremy Szafron for all of us here at Kitco News. Thanks for tuning in. And if you care about the real market news and not just the normal narrative, be sure to subscribe and to tell your friends as well. I'll see you next time.